Welcome to this new episode of Your Next Trade Code Today AI episode. So this is the end of August. Now it's back to school season, September, and where the big guys, the big investors will be back at their desk, and we will see in September the volume picking up again. As we're gonna see later, there are many trades that could unwind in the next few weeks. We're going to be talking about seasonality. We're going to be talking about the French mess in Europe. We're going to be talking about, as always, about macro. But let's start with what is happening in the market after the NVDA earnings that we had this week. Well, it feels pretty much like the AI peak growth infrastructure, where we had several indicators like Dell, we had Marvel Technology, we had the price of Oracle on Friday, but really NVIDIA, what was the term? What we see from this chart is pretty much like an amazing growth of sales over the last few quarters. So if you look at 2 years ago, roughly the sales of NVIDIA were around 10 billion. And the expectations is for the next 2 years to grow to 80 billion. So from 10 billion to 80 billion, we are talking an amazing growth. And if we look at Thursday's earnings growth and sales growth, the expectations were met. But more importantly, if you look at the quarter, so this is right now, as you can see, the growth is decelerating. So I'm not saying that there is no growth going forward, but as always, an investor, what matters to us is two things: is the growth going forward, and if we see for those growth stocks some upgrades. And unfortunately for that space, we don't see upgrades anymore. So it's a bit topping. And again, we are talking growth that is coming from 120% plus for the next 4 quarters, 8 quarters to less than 20%. This is a big number, but if you look across what the companies have been telling us this week, if you look at Dell, if you look at Marvel Technology, what they have been saying is actually some margins are under pressure. And guess what? The price action of those names have been coming down on Thursday and Friday. So let's look at the week-to-date asset performance. We have a flattish market for the S&P, for the Nasdaq, and for the Russell. Europe has been under pressure, as we're going to see later, because there is a bit of uncertainty coming with the French. As always, you know, the French are coming back, and this is not the back-to-school season. This is probably the back-to-strike season for the next few months. If you look at the currency, flattish for the euro dollar, a bit of pressure for crypto, both Bitcoin and Ethereum down 8 to 10% for the week. And actually, interesting one, gold, which is the old school Bitcoin, has been doing very well. And as we're going to see with the chart, so stay with us, where we're going to be looking at the monthly chart. It looks like gold is about to be breaking higher. So if we look at the week-to-date industry performance, and this is really the interesting chart where we see the dispersion in the market. So you do have like the S&P 500 here, you do have like the Russell, you do have the Nasdaq around here, but more importantly, you see the dispersion between the losers and the winners. And on the left-hand side, this is another one that is interesting. Despite the not so much of a move for the yields, we are talking the 10 years, actually the 30 years, the long hand of the curve, really long hand, has been moving very much higher. This is true in Europe, this is true in the US and in Japan, and that has been affected home builders and as well utilities. So the pressure that the Trump administration is putting on the Fed, trying to replace people like Cook, actually is not perceived that well from the market. If you look inside of the sectors that have been moving and those different industries that are affected by higher yields have been under pressure. Right hand side, you do have like gold, obviously, silver, nuclear, metal and mining. But literally for this week, there's a lot of dispersion that has been happening. This is the same with the sector performance, where you're going to have 4 sectors that are roughly flattish, and as you can see, utilities and consumer staples, so the defensive ones, have been under pressure. Only energy is a big winner, but as well I want to flag financials, where the banks have been doing very well. So JP Morgan was, I think it's up on the week. There have been some talks that there's going to be a re-rating of the banks because, it's the economy. But guess what? As long as the economy is going higher and the GDP growing, that is true. But the banks are leveraged. They do have like a massive book. If the economy is slowing, that has two effects. That means the quality of the assets are coming down, and the return on equity as well is coming down. So I don't think that there's going to be anything like the multiples of banks going like the multiples of big tech. This is just, the hoo-ha, pump and dump. Let's look at the rates, and looking at the 10 years for the US, we are at 4.23%, so pretty much flattish for the week. The German 10 years is flattish. I should have been putting for the week the French 10 years, which has been under pressure because there is a vote of confidence on the early September, and actually most of France is going to be probably blocked from September onwards due to a lot of strikes. So this is back to some of the scenarios that actually happened in 1995. If you've been around those days, literally there's going to be pressure on the OAT, which is the French 10 years, and the spread between the French 10 years and the versus the German 10 years is going to see is under pressure. Fed fund rate. So let's start about the Fed expectations for the September meeting. We are roughly pricing 80 to 90% chance of a cut in September. But I think what is interesting, if you compare that with roughly the last FOMC meeting that happened at the end of July, you can see literally the red line moving into the blue line, which is the last one. And if you look at something like December, we see that there has been a massive move down, where actually instead of having one cut in 2025, now we expect two cuts. So a more dovish Fed. And through volatility, we had a bit of a spike of volatility. Why? Because NVDA, as I said, was a bit under pressure. We had as well, let's say, a sell-off. That's a big one on Friday, where the S&P was down 30 to 40 points. End of the month, a bit of rebalancing after quite a strong month for a month of August, where the market was up 2%. So we had a bit of a sell-off, but literally this was the rotation. And when you get the big names like NVIDIA or Dell or Marvel Technology and Oracle that are under pressure due to the weightings, that puts pressure on the overall market, and the volatility going a bit higher as well due to the bad seasonality, as we're going to see later for September. So I want to go into the charts, and I put two charts for this week because this is the end of the month. So top of this chart is for the S&P futures. This is the daily over the last few years, and the bottom would be the monthly chart. And it's always very helpful at the end of the week, end of the month, to see how has been the price action. So let's start with the S&P. We have been trading around that line. This is the same. It's almost like it's mechanical. As long as you don't have any change, you compress volatility and the market is grinding higher. If you look at the candle that you have for the monthly, this is not a bad candle. So far, again, the trend is still your friend. If you look at the NASDAQ, that has been not as performing as much as the S&P, should we be saying. A bit of more indecision, as you can see, between not a big move, but pretty much when the open and the close is the same. That means that the market doesn't really know what is the next move. Russell, this is something that we flag at the start of July, where we said there is a good chance that it's going to be strong and that it's going to be outperforming the market. The reason was pretty obvious. There were two reasons. It was the cut that were expected from the Fed, and as well the rotation, or should I say the broadening of the market. Most of the time, what you see is actually in early September that the Russell could be underperforming the market. So now let's look at the currencies with the euro dollar. If you look at the monthly over the last 3 months, it has been between 114 and 118. Not a lot of indecision, but longer term, you can argue that there is a chance that the euro could go higher. Unfortunately, due to the unrest or the start of the unrest in France, I think there's going to be some pressure on that name. One that I want to flag, because this is crypto and this is Ethereum. We talk about it since it has been around 3,000. Really big move. We are up 50% over the last 2 months in that space. And go back into the old school crypto, looking, not this one. Where is my gold? So let's look at gold. And this one is really, to me, the most important one. That has been basing over the last 3 to 4 months, and you can see we closed at the highs. So you see that the chart that is daily here, literally it feels like the breakout is ongoing for the gold. What about NVIDIA? NVIDIA, we discussed that on the channel for the most advanced Discord channels. The one, it's funny because I traded it on the day where it went to, I sold it at 183.60. So that was really an important level. And it came down, and that was the same with the S&P trying to break higher. The S&P broke higher, but then came back. Finally, I want to discuss Germany versus France, looking at the 10-year. So over the last 10 days, the OAT, which is the French 10 years, has been under pressure versus the other yields. Why? Other bonds, should I say? Why? Because the French is going through the same as usual back to school season, back to strike season, where the government probably is going to fail in early September. So that means for the budget to go through for the 2026 budget, it's going to be like last year, an automatic budget. And, we're going to have uncertainty for the next 18 months due to the presidential election that will stand in 2027. So we are seeing pressure in terms of yields for the for the French 10 years. If you look at the big picture, when there is really a big move, you can argue that the spread could be much higher. In terms of stocks, by definition, that means French stocks like the CAC 40 have been under pressure. Banks like BNP, Société Générale, and some other names, obviously, have seen some outflows and some pressure. So this is something to look at for Europe, not only for the yields, but for stocks. For the week, so what happened for the week? So we had the NVIDIA earnings. Well, we already discussed that. They were in line. I think the market going forward has been pricing most of the growth. So that means the multiples are where they are. But we see that growth is decelerating. And we are moving from the AI growth infrastructure to the second story about AI. This is, implementing AI. What are the companies that are going to be benefiting from it? What are the apps that you could be creating? What are, for example, we discuss a lot about the software companies that have been under huge pressure. This is something that we flagged in the Discord community. By definition, if you can build, a software company quite quickly, you are competing with the existing one. So this is the next phase of AI, where we move from the growth infrastructure to implementation of AI. So this is for the NVIDIA earnings. We had as well, as always, when we do our filtering and our ID generation, we look at the macro, and this is the PCE that you have here versus the Fed funds targets. And what you can see, there is a bit of for the PCE around 2.9%. So what is important, if you do a bit of research, you probably know, if you've done the 4x4, that the Fed target is around 2% year on year. Now for this month, we had plus 2.9% for the PCE. So reality, I think the Fed is fine with it, because the 3% is the new 2%. So what happened is, actually not so long ago, over the last 2 years, the Fed has been saying, 2% is probably a minimum, but we'll be fine for having 3 to 4% inflation that is transitory. The risk is the transitory inflation is the same as 2021. So be careful with that, especially for the Fed. For the time being, there's a good chance that we will be cutting. So this is for the PCE. We had the end of the month, not much happening for the end of the month. Started, at the start of the session on Friday, but overall we have been flattish for the week. I want to flag two things. This one is the no crying in the casino. where you see the share of volume coming from 0-day to expiry is literally continues to go up. So this is a good chart from Bank of America. So the Nasdaq, we are talking roughly 70 to 80% of all the options that are 0-day to expiry. So this is quite crazy. So people are really trading, I should say, retail traders and even hedge funds are trading very short term with those options. If I give you some example, on Thursday, I shared with the community that even if the market was pretty quiet, I thought that it will come down a bit. So I bought the 647 Friday put. I think I bought them at, not that I think, I bought it at 0.8. And I sold them the day after at 240. So those are the good tools if you don't want to be. So you allocate a budget through the premium, you do it for short term, but that should be only a very small part of your trading. But that tells you that the trend that you see there is really the same. It's going up and up and up. And finally, talking about where we started, which is the AI peak in infrastructure. I think what is important is you see how the annual earnings growth for hyperscalers is coming down. Literally, we had a very good growth at 40-50. This is still, we are talking 20%, 10%, but this is pretty much the same trades that we have been doing in 2018, 2022, which was the cloud, where the cloud was growing big time. You had exposure to the industry, everyone was growing 30 to 60%, and then suddenly the growth was slowing, margins were under pressure. And that means you get some winners and losers. And here, this is exactly the same. And finally, as well, finally, number two, Fed is under pressure. We know that Trump administration is trying to put, people, changing people. We've seen this week that they have been trying to replace Cook, which is one of the members. But, the short-term win that you could have by putting new people, actually, in terms of the premium that investors, because investors are not only in the US, and I can tell you in Europe and in Asia that the perception is if the Fed is not dependent, guess what? The long term of the curve, the 10 years and above, the 30 years, the premium is going higher. And this is what we saw over this week. This is why we saw some sectors under pressure. So let's look now at the catalyst for this week. We start the month. So as always, there are tons of macro data. We start with the ISM manufacturing on Tuesday, not on the first day of the week, because, from time to time, even in the US, they take a day off. This is my French way of making jokes. So this is Labor Day on the 1st of September. So we do have like ISM manufacturing PMI on Tuesday. We get the same with ISM services. As always, start of the month, that means a lot of job numbers. So we get the jobs, we get the ADP, and we get NFPs. If you look at the NFPs, we know what has been the trajectory. We know that the last 3 months we have been barely creating any jobs. That's going to be very important due to the dual Fed mandate. If we get the bad numbers, you can make sure that the market, and actually we're going to have the Fed saying, Trump's putting more pressure that you're going to have cut, but you don't want to have like a very bad number, because otherwise that means that actually the economy is under pressure. Unfortunately, this is not the right S&P SPY weekly straddle, so check it. So we got the macro, we have the bad seasonality of the S&P or the indexes. If you look over the last 29 years for the S&P in September, on average, we have been down 80 bips. As you can see, over the last 10 years, there is a lot of red ongoing. This is the back to school season. This is, where the investors are coming back. So most of the time we are talking the futures, we are talking market stocks being down. So seasonality, this is done. We have over just after the close, guess what? The tariffs legality. So there has been a challenge about how legal the tariffs from Trump administration has been. For the time being, they are still going to be running, but legality has been challenged, so there's going to be noise around it, but you know, it's going to be back and forth. We can make sure that it's going to be challenging in the next few months. As I said, Europe and French drama. I'm French, I'm both French and British, but you can argue that this is, you know, the normal way of French of doing things. But I think this time, due to no visibility that Macron, the French president, wants to keep his seat until 2027, that could mean more social unrest in September and for the next few months. So look at the spreads, look at the European markets. In terms of earnings and conferences, we still got big names that are coming. We got CRM, for example. We got Broadcom. We got other names like Lululemon. So some earnings. Most importantly, it's a back to school season, meaning we do have like conferences. So I put some of the conferences here. This is not necessarily happening on Monday, but that tells you that across sectors and industry, you'll see companies making the headlines and commenting. In terms of bond supply, start of the month, not much. We do have like a bit of Fed speakers before the Fed goes into the quiet season. But more or less, this is what we have for the week back to school. Bad seasonality, unfortunately, the SPY weekly stride also probably is 1.4 and 1.5% looking at the VIX. So this is it for me for this week. I know in the US you're having a long weekend. Good for you. Market in the US is back on Tuesday, Europe and Asia tomorrow. Any questions on how we do that, how we do this filtering, how we do this process, you can send me an email at Greg@Dupont Trading, or you can subscribe to the 4x4 video series, or you can subscribe to the trading community where there is a free channel where you're going to land, which is called Newcomers. And then beyond the paywall for $75 a month, you're going to have access to 30 channels where we share ideas, we share the process, we share research, we shared, you know, the files for the week, for the month. So this is what we do. And finally, for the most advanced traders, what we do as well is the mentoring. So this is one-on-one session on Zoom. This is 12 sessions over 3 to 6 months where we go through the different steps of the education, and for you to go from, you know, being very rookie in your ID generation to generating trades. We do that through options, we do that with stocks, we do across asset classes, and we try for you to learn, you know, what I've been learning myself over the last 25 years through prop trading, hedge fund, and long only. So this is it for me for this week. For those in the US, have a good long weekend. For the other ones, back to your desk tomorrow on Monday. Thank you. Have a good trading week. Bye-bye.